Headline consumer prices held steady in September, up 3.7% year on year. That is a touch ahead of expectations, while core inflation cooled slightly on an annual basis. Let's break down the numbers with Yahoo Finance reporters Dani Romero and Jared Blikre. They're looking at key sectors that drove those prices higher. Let's go first to Dani. Dani, I know you've been watching shelter inflation, among the largest contributor to CPI this month.
Akiko, the shelter index was a surprise to the upside. One economist from Ernst Young told me that this was larger than expected, and he was expecting a little bit more of the disinflationary momentum. And if we look under the hood of the shelter index, the component of what are the drivers that are driving that index specifically, real-time data shows that rents are flattening out on a yearly basis. Second, owner's equivalent rent, that's hypothetically the rent that you would pay to your property, to your own property, reflects home prices. And so there's been a little bit more persistence in that area. Home prices have definitely gone up, but due to the fact of the lack of supply on the market. But some economists are expecting that on a monthly basis, the shelter index will actually come down. Now, some have said that that could happen in October, in the later half of this year. Another part that really stood out from this report was the tenants and household insurance. And that really is a function of higher home values and higher risks, whether that could be some climate change that factors into that. But overall, Akiko, one economist told me that paradoxically, this is actually a really good signal ahead to what we could see in the inflation picture overall.
Jared, I know you've been watching autos closely there, up and down this year. What do we see in September?
It depends on whether or not you want to buy a new car or a used car. And let's go to the Wi-Fi Interactive. I have both mapped out, and they're going in different directions. First, you can see new vehicles here heading up. We have the wrong direction. That's why we have that red arrow there, up 2.5%. That's year over year. And then used vehicles, those are going down 8%. So let's take a look at the time series. This is going to go back all the way to the 1950s. This is used cars and trucks CPI. This is the raw index number. What stands out, we have a couple of long-term trends here between the 70s and 2000. Then we kind of stagnated. But then the recent era, that's the pandemic at work there. You can see just exploding to the upside and to the downside. And you can really see the oscillations here when you take a look at the year over year numbers. And this is a change from exactly 12 months ago. And you can see we spiked all the way almost up to 50% for used cars and trucks. That's when we had supply chains. We were talking about that every day and those disruptions. Fortunately, that's largely in the rearview mirror. But now we have to worry about inflation from labor and the fact that UAW is striking. So let's take a look at the new car prices. Here's new vehicle CPI. That is still heading up here. That is not inflected down since that pandemic rise. And then here's another look. Here's the year over year change. You can see the growth is heading down, but the raw number there is still increasing there. So good news that we're off of the highs, but still seeing new vehicles really add to those cost pressures. And then let's just take a look at some stocks here. I have used car dealers, and this is on a year-to-date basis. You can see a lot of green there. Carvana is a standout. That's up 600% after being absolutely decimated. But you take a look at what's happened over the last 2 months when we saw the overall market kind of roll over. It was not a very good environment for some of these stocks here. And then I can also take a look at our new car manufacturers. This is over the last 2 months too. It looks a little bit better because Toyota Motors, a big company there, up 8.6%. Tesla, another big company, that's up 8%. But for the most part, most of these stocks in the red as well. So the environment that we have right now with regard to whether or not you're in the market for a new car or auto depends on, I guess, which you're in the mood for here. And also for buyers of stocks of these companies, just know that these have suffered as of late, and they're looking for their footing right now, as is the general market.
Yeah, regardless of what car you buy, those monthly rates still very high given where rates are right now. Jared Blikre and Dani Romero breaking down those sectors for us. Thanks so much.